Shares of publicly traded corporations are traded on the stock market. The primary market is where businesses offer their shares to the public in an IPO to raise money. New securities are exchanged in the secondary market after being sold in the primary market, when investors purchase shares from one another at the going market price or at a price that both the buyer and the seller agree upon. The regulatory authority controls the secondary market and stock exchanges. The Security and Exchange Board of India oversees both the primary and secondary markets in India. Stockbrokers can trade firm stocks and other securities through a stock exchange. Only stocks that are listed on an exchange are eligible for purchase or sale. As a result, it serves as a hub for stock buyers and sellers. The Bombay Stock Exchange and the National Stock Exchange are India's top stock exchanges. Here in this video, we will talk about the stock market and its upcoming crash in reference with Robert Kiyosaki. The video is going to be very interesting, so make sure you stuck at end. Before we continue to our video, make sure to smash the like button, subscribe to our channel, and hit the bell icon to never miss any of our future uploads. Now let's get started. Importance of stock market. The spectrum of socialism inside the communist nation stretched from Yugoslavia's quasi-market, quasi-syndicalist system to Albania's centralized dictatorship. I once inquired of Professor von Mises, the renowned authority on the economics of socialism, where on this spectrum of statism he would place the label socialist or non-socialist for a nation. I wasn't convinced at the time that there was a set standard for making such a clear-cut determination. So, when Mises responded, I was pleasantly startled by how succinct and authoritative it was. He immediately replied, "A stock market. The presence of a stock market is essential to capitalism and private property, because it indicates that a market for the exchange of private titles to the means of production is active. Without a stock market, there cannot be true private ownership of capital. And if such a market is permitted to exist, there cannot be true socialism." Purpose of stock market. 1. Quickly and easily sell securities. Along with debt markets, which are typically more demanding but do not trade publicly, the stock market is one of the most important ways for firms to raise money. Other notable methods include the bond market and derivatives markets. This opens the door for companies to become publicly listed and to acquire more financial capital for growth by selling ownership shares of the company on a public market. Because an exchange provides investors with liquidity, holders are able to rapidly and easily sell assets through the exchange. When compared to other types of investments that are less liquid, such as real estate and other types of immovable assets, this is an advantageous quality of stock market investing. 2. Primary indicator of economic strength. It has been demonstrated throughout history that the price of stocks and other assets is a significant component of the dynamics of economic activity, and that it can either affect or serve as an indicator of the current state of public sentiment. An economy that is believed to be on the cusp of great things is one in which the stock market is experiencing growth. The performance of a country's stock market is frequently cited as the major measure of that nation's economic development and strength. 3. Financial stability. A rise in share prices is typically connected with an increase in the amount of money invested in businesses, and vice versa. The wealth of households and their spending habits are also impacted by the price of shares. As a result, central banks have a tendency to maintain a close check on the management and behavior of the stock market, as well as, more generally, on the efficient operation of the functions of the financial system. The maintenance of monetary and financial order is the primary responsibility of central banks. Exchanges also serve as the transactions clearinghouse, which means that they are responsible for the collection and delivery of shares as well as the guaranteeing of payment to the vendor of a security. Because of this, there's no longer any danger of the counterparty failing to fulfill their end of the bargain for an individual buyer or seller. 4. Economic growth. When all of these operations go well, it makes it easier for economic growth to take place. This is because decreased cost and business risk lead to increased production of products and services, which may lead to employment opportunities. In this manner, the financial system is presumed to contribute to higher prosperity. Nevertheless, there's significant dispute regarding the best financial system, which is either market-based or bank-based. Recent occurrences, such as the global financial crisis, have prompted a high degree of scrutiny of the impact that the structure of stock markets has, in particular with regard to the stability of the financial system and the transmission of systemic risk. Crashes in stock market. A significant decline in the share values of stocks listed on stock exchanges is sometimes used to characterize a stock market crash. In addition to other economic causes, fear and the public's declining confidence in investing also play a role in stock market crashes. Stock market declines frequently burst speculative economic bubbles. There have been well-known stock market collapses that resulted in billions of dollars in losses and extensive wealth destruction. Since Social Security and retirement plans are being increasingly privatized and connected to stocks, bonds, and other market components, there's a rise in the number of people who participate in the stock market. There have been several well-known stock market collapses, including the 1929 Wall Street crash, the 1973 and 1974 stock market crash, the 1987 Black Monday, the 2000 dot-com bubble, and the 2008 stock market crash. By Robert Kiyosaki. The major crash that Robert Kiyosaki anticipated has allegedly occurred. However, given how difficult it is to find safe havens these days, this may also be the ideal time to become richer. Due to the Fed's rapid rate hikes, stocks have plummeted, Bitcoin is in a slump, and even the formerly hot real estate market appears to be cooling off. Robert Kiyosaki, author of Rich Dad, Poor Dad, thinks that now might be the best time to become wealthy despite the temptation to hide out in money. In a tweet, Kiyosaki describes how he built a fortune during the Great Recession by defying the norm. The author has also advocated for significant crash. In 2013, I released Rich Dad's Prophecy, which predicted an even bigger crash. This is the crash. Millions of people will perish. Incoming crash in stock market. The Federal Reserve raised interest rates by 0.75% on Thursday, making it the fifth rate increase this year and the third one in a row to do so. The Consumer Price Index, CPI statistics for August show that inflation is still persistently high, and the Fed has stated that it will prioritize bringing down inflation even if it means a higher unemployment rate, because the Fed has publicly stated that this is what it requires. Brad McMillan, CIO for Commonwealth Financial Network, believes that we will likely be experiencing a recession. Investors are understandably anxious about how much worse things could get in the near future due to recession fears, high inflation, and high borrowing rates making things harder for firms and individuals alike. There has been a lot of volatility, so we asked 6 experts their predictions for the second half of 2022 and advice on how to be prepared for the worst. 1. We have not hit the bottom. Investors always wonder how far the market will go as it starts to fall, but it's practically impossible to anticipate. Investors might get an awakening when their stock portfolios decline by 20% or more, according to Thomas Muas, a financial life counselor with the financial counseling firm Telemus. He continues, I don't think we've hit a bottom. According to what we've observed in the first half of the year, the market has experienced a prolonged decline of more than 10%. His counsel, continue making monthly investments. In situations like this, dollar cost averaging is effective. Always remind yourself of your investment goals. When circumstances seem unsure, bear that in mind. 2. Worst is behind us. Despite how unpredictable this year has been thus far, we should continue to be ready for even more change. The general set of factors affecting consumer purchasing is evolving, and they are entirely different from anything that has gone before. Combine the geopolitical concerns with the crisis in Ukraine with the Fed's decision to raise rates, which undoubtedly adds to the inflationary pressure on the supply of food, gas, and energy. All of that is things that we haven't fully experienced yet. We'll still be feeling some of it in 2023. According to Melissa Bouchelin, managing partner at Savannah, Georgia-based Soundview Wealth Advisors and a certified financial planner. How to prepare for the rest of 2022. Our experts agree that it's likely to be a bumpy road ahead for the remainder of 2022. But, crash or no crash, recession or not, history tells us time and time again this is part of the journey. 1. Keep your portfolio diversified. The diversified, long-term portfolios that have been on the market do the best. A well-rounded selection of equities from businesses in many industries. In this manner, if one business or industry suffers, the others might take over. Experts advise investing in low-cost, broad market index funds because they instantly diversify your portfolio and help you keep your wealth safe. 2. Beat inflation by investing. It is critical to invest your money because of the general increase in prices that accompany inflation. In accordance with historical norms, the stock market typically generates a normalized annual rate of return of 10% per year. The current rate of inflation, which is approximately 9%, is the highest it has been in the last 40 years. You can protect yourself against the effects of inflation by making investments and ensuring that your portfolio is diverse. 3. Volatility is normal, so hang on for the ride. Although it is difficult to accurately anticipate what will occur over the next 6 months, market volatility is now thought to be expected, according to analysts. Additionally, experts concur that it is advisable to keep onto your investments and ride the wave as the market shifts and flows over the coming several months. You want to remain calm when things are difficult and focus on the long-term investing goal. Hope you guys enjoyed our video. Make sure to subscribe to our channel and hit the bell icon for more videos. Thanks for watching, and have a wonderful day.